depending on what the consumer is doing. It seems like as the consumer shifts, Meta has something there to appease that consumer, whether it's international contacts through Facebook Messenger and WhatsApp. Welcome back in YouTube to the Financially Fit channel. Today we're going to talk about Meta. As we all know, Meta has been dealing with some serious turmoil, so today we're going to figure out what is the stock really worth on our valuation. Is this the next Intel? Are they dealing with such competition that they can't repair themselves or recover? So let's get into it. By the way, if you're new to the channel, welcome in, consider subscribing and smash that thumbs up. Obviously, we can see here, Meta reports drop in revenue for the first time. This is definitely a company in a transition point, as we can see that the stock has done nothing but fall off of a cliff here, going from $323 in February all the way down to $154 for the 52-week low. So in a short few months, this thing has been cut more than in half. And this is a company that spits off a ton of cash flow, that has a lot of businesses within its model, and I don't think it's going anywhere. Now, it is having some issues. Is it like Intel? I don't think so. Intel is kind of just a one-trick pony where it deals with chips. Meta deals with people's time and many different platforms to gain people's time. And with that time comes revenue, whether it's through business transactions, ad revenue, many different ways with high margins. So in my opinion, I do think Meta's business model is repairable, and we're going to go through a quick history of Meta. This illustrates really well kind of the history of the last 15 years with Meta, the companies that it's acquired and or created within its platform. Obviously, we're going to highlight Instagram as one of the big winners. And we have WhatsApp, Oculus as major underlining assets within this model. The big one that they're hanging their hat on, guys, is the one that's competing with TikTok, and that is going to be Reels. And if you're not familiar with Reels, it is very similar to TikTok, where you create short videos that engages your viewers and shows off your creativity. That new quick short attention span that the viewer is looking for, and that seems to be blowing up here for Facebook, and it's something that they're hanging really heavy on going into 2023. When we look at Facebook from a historical standpoint and valuation, obviously valuations have come down drastically. Both the trailing and forward PE was sitting right around a 29 all the way down to about a 12 to 14. What we have to figure out is what is an appropriate price for us to pay to take on the risk of a company that might not grow over the next few quarters, that has to invest in their business model and is dealing with kind of a transition standpoint of their business overall. So total revenue came down. Obviously, that was the big reason why we saw the stock kind of retest those lows once again around 154. Was we saw that last year they did around 29 billion in revenue for the quarter, and this year they did 28.8 billion. Not a big miss, roughly a 1% miss, but this is once again the type of market we're in, where if you're not showing any sort of growth, it's just going to impact the stock. There's no exception for no growth in a high inflation market, it seems. Does that mean that they're not going to grow in the future? Obviously, that's really up to what you think their assets are going to do within their business. The one thing I find very interesting with Meta is how many businesses are really within their model, and at any given time, whether it's entertainment through Reels and Instagram. So they always seem to have that carrot dangling for that consumer at the right place at the right time. And so I wouldn't count them out, because as the consumer shifts to possibly something else that is going to stimulate them, I think Meta has a good opportunity of being one of the first people or one of the first businesses there to capture that consumer. So therefore, I don't think they're going to go anywhere. They have billions of users on their platform. And the nice thing I noticed about their report was, that's one thing we can kind of highlight here, is daily active people on the platform was at 2.88 billion. That is an increase of 4% year over year. So while they are losing on the revenue side due to ad revenue and due to possibly foreign exchange as well, they are gaining, they are capturing a little bit more of an audience here, which is unbelievable because they already have so many billions of people using their platform on a daily, monthly, and a weekly basis, that if they can recapture, if we can get the economy back in a strong position here where businesses are starting to spend for ad revenue, obviously this flips their business model completely back around. And now we're probably looking at a company trading at 15 or 20 times earnings rather than 12. So, I see the opportunity here. It's just unfortunate that we are in a market here where it seems that, small to medium-sized businesses are definitely impacted by the inflationary cost, and your larger businesses are handling it a little bit better. So due to that, we're starting to see ad revenue really tick down, which to me, I look at Facebook's business model really set up for the small and medium-sized businesses to get in front of the consumer and sell their products. So the CFO came out and said that they expect revenue to be between 26 to 28.5 billion for the quarter, and foreign currency will be approximately 6% headwind year over year for total revenue growth in the third quarter. So, I've talked about this before. The foreign exchange, the dollar being so strong, is impacting a lot of companies. Now you look at a company like Facebook, who really deals with that small to medium size business, and they're also dealing with international currency here. So therefore, it is getting hit by both directions. What can we pay to build some safety in our projections, so that way there, if the stock does dip, we're not losing our shirts, but when it does recover, when the economy does recover, when small and medium-sized businesses start advertising once again, we are there to obviously join in the profit sharing when Facebook recovers. When we look at some analyst price projections, we can see here we have as high as $580 a share all the way down to $186. Let's say over the next few years, it's going to be pretty difficult here for Facebook, as I do think the dollar is going to remain fairly strong. I think they are losing some market share, and I think they're going to have very slow to almost no growth. So from year 1, 2, 3, I'm going to put 1% revenue growth here. From years 3 through 6, I'm putting 7% revenue growth. Now, the reason why I'm doing that is I do think that there will be shifts in consumers, and I do think Facebook will capitalize on that. Along with that, I think they're going to get Reels to start performing pretty well, and that'll be a big asset on their balance sheet. I don't think they've maximized the capabilities of WhatsApp and being able to capture more revenue from that aspect of their business as well. With that, I do think the economy will recover in 3 to 6 years. Small and medium-sized businesses will start spending on advertisement, and therefore I do think we can see a 7% rate of return. We can see that them start ticking up their rate of return. Now, the reason why, guys, I have 11% rate of return from 6 through 10 is I do think that there's still the opportunity here. The metaverse will start paying off, and along the way, I do think that because they're going through a growth phase, they are going to have an opportunity to grow double digits down the road, whether that's through mergers and acquisitions, as we've seen over the last 15 years. They have done many, many mergers and acquisitions. So while I do think the stock is going to be stagnant basically from 1 to 6 years, I could see double-digit growth from 6 to 10. And so that's why I'm putting out these projections, guys. When we take a look at top-line revenue growth, it's just super impressive, growing top line very, very strong, averaging roughly 28% top-line growth. EBITDA margins at 44%. Gross margins, I think, are reaching right around 80%, and free cash flow is roughly 30% of their revenue. Structurally, there is nothing really wrong with this business model. This is a cash cow, and this is why, guys, I really could see double-digit growth down the road, as they have so many businesses within their model. They have very, very strong free cash flow where they can do mergers and acquisitions. And I think they're going to eventually hit on some of these over the next 5 to 6 years. I just see with this kind of free cash flow and revenue being generated, the right investments could earn double-digit growth down the road. Now, their business model alone, I don't see that. The Facebook platform is pretty much at a mature state. I don't see that asset growing double digits. But I do see other assets within their business model that could catch people off guard, whether it be Reels, whether it be able to monetize WhatsApp better, or whether it's going to be the metaverse in the future. I think one or two of these can hit, and therefore I could see double-digit revenue growth down the road. Now, cash position still remains strong, but we can see here it went from 54 billion down to 60, up to 62 billion almost, and now it's down to 40 billion. So I definitely keep an eye on both their cash position and their total debt. But overall, guys, this is a Class A balance sheet trading at a pretty good discount, I would say, from historic valuation. In 2030, I have them doing just a little over $203 billion in revenue. Now, in 2021, they did $117 billion in revenue. So I'm not saying this is going to be a 10x revenue growth here. This is going to be slow and steady revenue growth. As you guys saw, I think it's going to be pretty stagnant over the next few years, and you could have some dead money sitting there, but I think longer term, they're going to have some assets here that outperform, catches the market off guard, and probably regains some of its valuation back. But there is the other aspect, guys, where competition is ticking up, and maybe they are becoming outdated and not as innovative as their competitors. And obviously, we know with the Apple incident, they could have some issues here. So there's definitely some headwinds in the short term, but long term, I think there's so much cash flow spinning off on this business and so many assets with inside the business that are going to perform. It's almost like I don't really see, it's just well diverse. I don't see them falling off of a cliff here. So when I run these valuations, I get a price target of 124 and a DCF model of 136, guys. So here's the interesting thing. This stock has hit 154 a few times, and I think there's an opportunity for it to break this support level of 154, and therefore I do think there is an opportunity to scoop up Facebook between 136 to about 125. So this is the price target I would be looking for Facebook, with a fair market, with a fair value of 390, kind of regaining that almost that $400 price target that it had a year ago. So kind of regaining that in order for us to get a double-digit rate of return. I personally believe we need to be buying the stock between 136 to 125. So these are kind of the price targets that I'm looking at right now. For a discounted cash flow, guys, right now the stock is trading at fair value in my personal opinion, okay? I think the stock is at fair value right now. So in order for me to kind of build some return in there, I do need it to dip down a little bit lower using the expectations that I have in this model. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.